right, so we are going to quickly go through the pips. You already have the video actually explained it, and there's really nothing complicated about pips. You just have to know that there are the different currencies, different commodities actually have the different ways that we do the calculation. So there are different ways we do the calculation. 1 minute, please. Okay. Can you see my screen?
Yes, very clear.
Okay, so there are different instruments in the markets. You have, of course, the Forex pairs, you have the indices, you have gold, you have oil, you have Bitcoin, that put Bitcoin and Ethereum, but I had to separate it, So now I picked this one because it covers virtually everything that we trade. Can I increase the screen? Okay, so it covers virtually everything that we trade, right? So now for most currency pairs, you see, one pip, this how it's represented. This how it's represented. For instance, let's check the price of Euro GBP, or no, Euro USD. Let's check Euro USD, for instance. What's the current price? So Euro USD currently is at the market price of 1.11120. So it's at 1.11120. So that's actually like the standard. The standard, you always have, like 4, 1, 2, 3, 4. So this one can actually be negated. You can say it's 1.1111. So that's actually how it comes. But then if you look at Euro, something like Euro JPY or any of the JPY pairs, they always come in, they have 2 decimal places. So Euro JPY is currently 164.43. So it's currently 164, 0.43. So they usually have, importantly, is it 2 decimal places? Is it 2 decimal places that is, behind it, and then this one is 4 decimal places. And this is actually very important. This is actually very important if you want to do your calculation. So now, if Euro USD moves from, okay, let me use the example I put here. If Euro USD, for instance, actually moves from this is a buy because it's going up. It moves from 1.1050 to 1.1055. That's a 5 pip move. And also, if it moved from 1.1050 to 1.1045, it's still the same 5 pip movement in the down direction. So do you understand?
On sell.
Yes, on sell. The other time it moved on buy. This sell. Then for this, it actually moved up in a buy. It moved up in a buy. So that's a 5 pip movement. So if you are in a trade and they say that, okay, look, your stop loss is at 20 pips and all. So assuming we are using this, okay, let me put another stop loss stop loss of 20 pips, for Euro USD. So if it's at 1.1050 plus 20 pips, means that, okay, let's say you are buying. So a stop loss of 20 pips means that your trade is below. So your stop loss here would be minus minus 20. Now, the 20 pips, you're going to simply just calculate, add this, add or subtract 20 pips, since this is a buy trade. Yeah, this is a buy trade. So if you're subtracting, 20 from 50, your stop loss is going to be at 1.1030. Fantastic. If you're selling from 1.1050, then your stop loss, at 20 pips will be 1.1070. That's if you're selling. So that's really like the simple, is very simple and straightforward to calculate this thing, like pip movement. But then you don't even need to be doing this manually, because once you come on the chart and you want to check this thing, maybe the number of pips, this trade, maybe at the point where they said long, at that triangle, you want to see how many pips to the line of entry. You simply draw this up, and then it shows you that, okay, it's 30 pips. It's 30 pips to the line of entry. So there is really no need to start doing wasting time and doing all these manual calculations, but it's actually good for you to know. Now, the other thing also that, for knowledge sake, and this is because I'm teaching you based on, what you demanded. I wouldn't start teaching any beginners all these stuff. So this pip value formula, if you want to know how much a pip is worth in dollars, right? So your pip value is 1 pip divided by the exchange rate, times the lot size, right? So 1 pip we know is this thing 0.001, because 0 is here, and then you take all the 4 decimal places and put 1 there. That's a 1 pip movement. So, and then of course the lot size is, you already mentioned it, a standard lot size is 100,000 units. So now the pip value is going to be, the pip/exchange rate times 100. So this is $10. So if you're using a standard lot size, let's say you enter this trade, for instance, this Euro USD, and then let's say you entered a buy from this, let me copy this. Let's say you entered Euro USD for a buy. Yeah, so from 150 to 170 now, to 1.1070 for a buy. So that's this thing, 20 pips movement. Now, 1 pip.
At some point, I didn't hear you because the network threw me out.
So where did we stop?
At 1 pip, the value of 1 pip.
Okay, we calculated the pip formula. You get the pip formula for a standard lot size. A standard lot size is 100,000 units. So now the worth of that pip in USD What's the value of that pip in USD? You simply multiply the pip exchange rate by the lot size. So 1 pip is 0.0001, and then the lot size is 100K. So multiply it, it gives you $10. So the value of 1 pip for a standard lot size account is $10.
Okay.
Do you understand it? You don't sound
I
like
didn't
you
understand it.
understand. Okay. So,
Yes, I didn't understand it. You're right, I didn't understand it. Like I'm
okay,
still trying to wrap my head around it.
okay. Let's see. If
Because where I got confused is where you say calculate 1 pip with the currency rate. That's with the
okay,
rate of the
you
currency.
see you
So
see this thing, you see this thing I just highlighted. This
mm,
number, this 1.1050. Hello? Hello?
yes, I'm here.
Okay.
Yes, I'm here.
Did you see the 1.1050 I highlighted?
Yes, yes.
Okay, that's the exchange rate. That's
Okay.
actually like the exchange rate for Euro USD. So now we want to find out the value of a single pip. So now for us to find the value of,
Okay, so instead of calling it exchange rate, for better clarity to a newbie, somebody who doesn't know his left from the right, instead of calling it exchange rate, personally, I would rather, for me to understand it better, I would rather call it the pair price, the current price of the pair.
you can't you can't actually say the current price, because what we are calculating is not the
Because on the
current.
chart, that's how it will be reading.
No, please pay attention. We are not calculating the current exchange rates. We are just calculating the value of a single pip, right? Let me
Okay.
even remove,
Mm-hmm.
let me just remove this, right? Let me remove this so there is no confusion. Now, we are calculating the value of 1 pip. What is 1 pip? If you want to represent 1 pip, knowing that for a currency pair like Euro USD, the pip representation, the representation is 0.4 zeros at the end. That is the representation
Okay.
of,
Yes.
Euro USD and all. So now, what
Okay.
is 1 pip? 1 pip starts from this movement at the end. Okay, let me even make it
Mm-hmm.
easier. Euro USD is represented
Mm-hmm.
as this. So you fill the number. So 1 pip of Euro USD is 0.1, 2, 3, and 1. That is 1 pip movement. 2 pips, 2 pips of Euro USD, 2 pips of Euro USD is 0.1232. Do you understand?
Mm-hmm.
Do you get
Yes,
it now?
yes.
Fantastic.
Yes, I do.
So that's how it is represented. 20 pips, 20 pips of Euro USD is 0.1220.
0.0020.
Eh?
Yes, 0.0020.
20, exactly. So now we want to know how much is 1 pip worth. That's the question. How much is
Yes.
1 pip
One
worth
pip.
for a standard lot size? Now, standard lot size, we represent it as 1.0. Standard lot
One,
size.
yeah,
Standard
1.0
lot
lots.
size is 1. Then this thing, mini lot size is 0.1, and then the
0.1.
micro lot
Micro
size is
is 0.01.
0.01.
0.01.
So this standard lot size, right, is actually 100,000 units. 100,000 units.
Yes.
And then the mini lot size is...
Sorry, Madge. Can you say that one standard lot size is equivalent to 100% of one's capital?
No. We are not going that complicated. Let's just keep it very simple. Okay? Let's keep it very simple. A standard lot size...
No. It's just a question that just flashed my mind. It's not on this.
Okay.
It's just a passive question. It's a passive question, not
Okay, the
based on what
question
you're teaching.
is...
Now, like some persons will say, like the person that registered me, when I was telling her that, I want to be trading with 0.1 loss side. She said, no, trading with 0.1 loss side is like you are trading with 10% of your capital per trade. No, it's high. It's too much. I said, okay. I said, so what do you suggest? He said, please, the highest you should go is 0.03. In fact, be using 0.01. I said, okay, what is the interpretation of 0.01? He says 0.01 is 1% of your capital. 0.03 is 3% of your capital. So I said, okay. But when I went back, I did what I wanted to do. I used 0.1. So I'm using it just by own spirit, my own intuition. But now that I have a coach, I said, let me just chip this question in and see. What does this lot size, what is the layman explanation of each of these lot size as regards to your capital in percentage?
Okay, I don't want that's why I said I don't want to answer that question, because what complicates things is when people want to go very technical. The simpler you keep it, the better. Now, we are going to use a lot size calculator, so that you see what your lot size actually represents. Okay, let's even use a lot size calculator, for instance. Okay. Let's use a lot size calculator, for instance, for this same Euro USD. And let's say you want to
can you use it for XAU?
See, we're explaining. I don't want us to be all over the place. We're explaining something. We are still on currency pairs. We've not gotten to XAU USD yet. So whatever explanation we are doing now, let us focus on the currency pair. When we are done with this, when I was showing you at the beginning, I told you that there's this thing. There's PIP representation for currency pairs. There is for indices.
Yes.
There is for gold. There is for US oil. There is for Bitcoin, and there is Ethereum. So we have to go from like the currency pair is actually like the easiest from what's less complicated to the other ones. So this example we want to show is for Euro USD, because this is what we are treating at the point. So let's look at it. Let's look at this Euro USD. Okay, let's assume using that our example, and what's your account size? What account size are you suggesting we use?
Okay, let's use $1,000.
Okay, $1,000. So yeah, this is lot size calculator. Your open price, and then your stop price is 1.10, the 20 pips, 1.1030. Now, the contract size, is, is standard units per lot. Every broker has, their contract size. This one, the lot size is standard, is 100,000 units per lot. So someone will not go and have 1,000 units per lot. So now, if you're taking this thing 3% risk of that money, it means that you're taking this thing, you're taking you're losing $3 and you're trading 0.1 as your lot size. So let's say if you put 100% risk. So if you're putting 100% risk, it's showing that your lot size, you're trading 5 lot size. You're trading 5 lot size. So your question of whether one lot size represents 100% of your risk, you can see that that question is invalidated. Can you see?
Yes.
Yes. So
Yes,
that's why I said we shouldn't go in, we should keep things very simple and straightforward. So you can see here that you need to trade 5 lot sizes for you to lose your 1,000. So that means 100%, we have time. We have 10 minutes. So 100% does not actually represent the one lot size. So let's not go there. So this is
okay.
so
That's on currency pair.
That's on currency pair. Yes.
Currency
pair.
Which means the
Euro
case could be different from others.
We'll still see it. So now what brought us to this side, to this point, is that we are trying to find out the the value, the dollar value of a pip.
Of 1 pip.
So
of 1 pip, yes.
Yeah, so if 1 pip is represented as 0.102030 and 0.0001 for a standard lot size. So that means your value for 1 pip, you're going to multiply it by 0.0001 times 100,000. So it will give you $10. So it means for every pip movement, for every 1 pip movement that your trade makes, you're making $10. So when they say that a trade like this one, if your USD moves from 1.1050 to 1.1070, it has moved for a buy. It has moved it has moved 20 pips. It has moved 20 pips. So your USD value will be $10 times 20
times 20.
So that is $200. That's $200. So the same calculation, you can do the same calculation for minute lot size. If you're calculating for mini lot size, then it's going to be 0.01 times 10,000. So that'll be one USD for every pip. So 1 USD for every pip times 20 pips, that's $20. And then 0.001 means 0.1 USD for 1 pip. So 20 pips movement will be $2. Do you understand? Do you understand it at this point? Hello? I don't know. I'm not seeing you. Do you understand? Or have I lost you?
Yes, yes. Yeah, network almost made you to lose me, but I'm back.
Okay. So do you understand for the standard?
No, I think I think I spotted something wrong in your calculation, the
Okay.
second one. Okay, so you say for the mini unit, you say for the mini unit that 1p is equivalent to $1, right? Which is correct. Then you now said 20 pips is equivalent to $2. No.
No, I said 1 pip is equivalent to $1. So 20 pips is equivalent to $20. For the third one, let's just for the third one is 1 pip is equivalent to $0.1 and 20 pips is equivalent to $2.
Okay, that's for micro.
Yeah, so this one is for mini lot size. Mini lot size. This
Okay.
one is standard
Okay.
lot size. Mini lot size. So this would be $1. This will be $1 because the 4 zeros cancel themselves. This will be $1. So this has moved 20 pips. $1 times 20 is $20. So if we repeat the same calculation, for
20.
for the micro lot size,
For
micro lot size. So this one is 1,000 units for micro lot size. So this will be 0.1. This will be 0.1. And then 20 pips movement. 20 pips movement, we'll leave it at
Yes.
this thing, $2. So is it easier to understand now?
Yes. Yes, please. Yes.
Okay. So if you're in a trade,
Yes, it is.
yeah, so if you're in a trade, you can easily have an idea of, how much you stand to make and how much you stand to lose. And the thing is, if you're using MetaTrader 5, you don't even have to start doing all this in your head, because once you take a position, when you go to your chart on MetaTrader, you can click on the chart and it shows you how much your stop loss is in dollars and how much your TP is in dollars. So that's for currency pairs. And then let's quickly look at indices. Let's look at indices. And Dow Jones, NASDAQ, and then XPX 500. So let's see. So now 1 point in, okay, let's use US 30, right? 1 point, and then for some brokers, there might be a bit of variety. 1 point movement on Dow Jones, is represented as, of course, it comes in five digits. So if it moves from, let's say, 34,000 to 34,001, this is 1 point movement. This is 1 point movement. Do you understand? You don't sound like...
Yes.
So if it moves from 34,000 to 34,002, that's 2 points. That's 2 points. It's as simple as that. It moves from 34,000 to 34,100. It has moved 100 points. It's as straightforward, as that. Yes. So now the value of the value of like the dollar value is dependent on what your broker pays. So you have to check,
Okay.
you have to check how much, you have to be able to calculate how much each broker pays, for every 1 point of their of movement on this thing, their index.
Okay.
So, like now, for a lot of
Mm.
brokers, Xness is a bit different. A lot of brokers,
Mm-hmm.
one lot size of US 30 is actually $1 per point. So if you enter a
Okay.
trade, if you entered a standard lot size, of 1.0,
Okay.
of 1.0, and it is $1. It is $1, right? So that means if your trade
Mm-hmm.
moves 100 points, so it's going to be 100 points times $1, which is $100. Okay, so that is, we'll just have a short break and then, we'll continue from here after the break. Yeah.
Okay. The break is for how long?
The break is for us to allow. I hear you.
Okay.
Okay, so
Remember, you've not given me the recording for last night too.
I'll share. I'll share.
Okay.
Okay, so we're saying that this index, we calculated that if an index actually moved 100 points and you're trading it with a
Mm-hmm.
standard lot size, then
Mm-hmm.
you stand to make $100 for that 100
Mm-hmm.
points. So, and that's
Mm-hmm.
why a lot of times when you see on live trading sessions, people that trade index, they do an in out, so someone will take once maybe they get a 20 points movement, maybe their target is probably making 50 USD, a day. So they
Mm-hmm.
get a 20 points and they're using one lot size to trade it. So 20 points will give
Mm-hmm.
them $20, 30 points will give them, $30. So if they get on someone like a AJ Bonham's sniper session, where they might end up taking two trades and each of them moves 25 points. So that's $25, and then two trades makes $50 and they are out. So for indices, people don't like sit down in the trades like that because they move very fast. So it's also important to confirm how each broker represents their own movements. So the next one is gold. The next one is gold. And the same thing for US 30 applies for NASDAQ and then SPX 500. So or
Mm-hmm.
S&P 500, however, or US 500. So now gold is represented in two, is usually the quotes. When you see it on live quotes, is represented by two decimal places. So let me look at gold. Okay, so this trade, yeah, the buy bias was confirmed. I saw this Euro JPY, but I don't take Euro JPY. So, okay, so this is how gold is represented,
Anyone you see that is good, but you don't take it, please give me the take.
You said you don't take currency pairs. You said you don't take currency pairs, so.
Sometimes I do.
Okay, so this is gold. Gold is actually yeah, so we are not taking trades, So let's see. This is how it's quoted, usually two decimal places. That's the standard way of quoting gold. So now, if gold, one pip of gold is 0.01, on even the platforms. So if gold moves from 1920.50 to 1920.70, gold has moved 20 pips.
20 pips.
Do you get? Gold has moved
Yes.
20 pips. Because the pip is calculated in, one pip is 0.1. So 20 pips, 20 pips of gold, let's even do it. 20 pips will be equal to 0.20. It's really as simple as that. So if you have something like 120 pips, of gold, will actually be something like this. 1.20, that's 120 pips of gold. So if this trade moved from 19 okay, this by 1950 to 1920-70, then you can actually say, 1920-70, it has moved 120 pips. It has moved 120 pips. So it's as simple as it. And I'll always reiterate that you don't need to start doing all these manual calculations. When you come to, even on TradingView, you come on JIFU charts, there are tools here that allow you to easily calculate from your entry. You can check and say, okay, do you really want to enter this trade? This is an entry here. And then you can check to the invalidation points and see, okay, look, how many pips do we have for this movement? And you're the one that will decide, no, am I going to do this 380 pips of movement? And you say, no, I'm not entering the trade. Or you can enter and say, okay, no problem. If I want to take my exit, where am I going to take my exit at? So you now look for at least one-to-one risk to reward. And then your one-to-one risk to reward lies between exit 2 and exit 3. And you can take your TP. You can take your TP at that point. Now, the exit points on these scanners, they are just your guide. They are not, you mustn't, you can take your profit levels at maybe at any of the exit points or in between. So if your target...
That's what I usually do.
Exactly. So you mustn't wait until all the 5 TPs. No. You can just put your own profit points and say, okay, this is okay for me, and then you take it. So that's for gold. And then a standard lot size, to know the value, right? A standard lot size, is 100 ounces of gold. So how do you know the value? The same way we calculated for currency pair that time. How do you know the dollar value? How do you know the dollar value of 1 pip? So it's still the same thing. 1 pip of gold is quoted as 0.01. So you simply multiply 0.01 by this standard lot size, of 100 ounce. So multiply by 100 and it gives you 1 pip. So it means that if you're having, if 1 pip, 0.101 pip gives you $1, if $1 is equivalent to 1 pip in movement. So if gold moves by 100 pips and you're trading with a standard lot size, that means you've made $100. And the same pattern of calculation, if it moves, if you're using a mini lot size and it moves 100 pips, so you're multiplying 0.1 times 100, which is $10. And then if it moves, if you're using micro lot size, you're multiplying 0.01 times 100, which is $1. We've already done all that calculation here, so we don't need to go back, to repeat that. Okay?
Yes.
Is it clear? Do you understand?
Not really. Not fully
What
clear.
don't you understand?
Okay. So you have talked about the use of a standard lot size in gold is 100 ounce, right? And one pip in gold is equal to 0.01. So in order to know what one pip would give you in a standard lot size, so you say 0.01 times 100, right? So in mini lot size in gold is how many? It's okay. Mini lot size is 10 ounce. Micro lot size is 1 ounce. Okay. Okay. Okay.
This one means 0.01 times 10, which is equals to 10 USD, and then 0.01 times 1, 0.01 times 1. So this is actually 1. It's actually 0. Okay. No, I am the one this is
Check the calculation again.
yeah.
1 pip is equal to 0.01, right? 1 pip is equal to 0.01. 0.01 times 100 will give you 1.
Yeah, that's standard lot size. That's standard lot size. So now what we need to establish is the mini lot size, because I'm following the logic for the currency pairs. So the mini lot size, we need to find out if the mini lot size is actually 10 ounce, because the this thing for currency pairs, standard lot is 100,000 units, and then what do you call it? Mini lots is 10,000 units, and then micro lot is 100,000 units. Yeah, 1,000 units. So I'm just following that logic, but then it does not. I can see that it doesn't apply here. So I can always check on the internet to find out. I can always check on the internet to find out, but really, like I said, this is not the, this is actually like you don't really need this information when you already have tools that can do it for you. So imagine that every time you wanted to take a trade, you have to sit down and start doing all this calculation. So it's something that is for passing knowledge. This is not what you need to actually succeed in taking, your trades. Do you get?
Yes.
Um, Okay, so okay,
We'll still have a nice section, Abby.
that night session, I can't guarantee because I've not slept well. My sleep was distorted. That's why I'm feeling
I
a bit fatigued.
want you to sleep this afternoon. No?
No, I don't do afternoon sleep. My night sleep is where I get to rest properly. So micro lot size, yeah, I was actually right. Standard lot size, of course, is 1.0. Mini lot size is, of course, 0.1. And then micro lot size is actually, micro lot size is actually 0.01. So yes, I was actually right. I was actually right. So the movements here, this is one standard lot is 10 ounce, 100 ounces. One standard lot size is actually 100 ounces, okay?
Okay.
Yeah, 100 ounces. Then one mini lot size is 10 ounces. And then one micro lot size is actually 1 ounce.
One ounce.
Yes. So going by that calculation, I was actually correct. Going by that calculation, right? A standard lot size will give you this thing. If it moves by 100 pips, if it moves by times 100 pips, will give you okay, this all of them moved by 100 pips. All of them moved by 100 pips. So our calculation will be, okay, yeah. So our calculation will be this. Okay, I see where the issue came in. We're using this instead of using 1 pip. So this moved by 1 pip. This one moved, this is $1. This is actually $1 per pip. So it moved by 100 pips. That's why it's always good to label your calculation. So yeah, so this is 100. So this is 0.1 times 100 because it's 100 pips. It's 100 pips. So this is as well, all of the movement is constant, but 3 people took this trade on 3 different accounts. So one person took a standard lot and for 100 pips of movement made $100. Another person took a mini lot size and for 100 pips of movement made $10. Another person took a micro lot size and for 100 pips of movement, you have $1. So do you understand? Do you have any questions?
Yes, I do.
Okay.
No, go ahead.
All right. So we have for US oil on some broker platforms, it comes as this thing, WTI. You see WTI crude. It comes like that on other platforms. So confirm there's also UK oil, so don't mistake it with UK oil. So this is US oil, and the movement is actually just like gold. Is always represented in 2 decimal places. So on JIFU here, it's the one you call crude oil on JIFU, and then on the ticker here you see it as US oil. So you see how it's represented in just plain 2 decimal points. Yeah, so
Yes.
that is it. So if the price moves, and it's very important because sometimes people make mistakes with calculating this US oil. If the price moves from 70 to 70.5, it has moved 50 pips.
Okay.
If the price moves from 70 to 71, it has moved 100 pips. Do you understand?
Please take it again.
If the price moves from 70
Okay.
to
Okay.
50, this is
Okay. I
a
get
high.
it.
It has
Yes,
moved
I
by
get it.
50 pips because you start counting the
Yes.
pips from the decimal. One
Yes.
pip
Yes.
is like this. Okay, if we were to represent one pip, we'll say this thing is 0.01, just like we did in previous one with gold. So if
Yes.
price
Yes.
moves from 70, and you don't put it like this, you don't say from 70 to 71. No, that's not an accurate representation. 70.00 to 71.00. The price has actually moved 100 pips.
Mm-hmm.
Do you understand, or you're just
Yes.
saying?
Yes. Yes. Yes, I do.
Okay. So that's 100. That's 100 pips.
Yes.
100 pips. Now, a standard lot is equivalent to 1,000
1,000
barrels of
barrels.
crude, right?
Mm-hmm.
So if you want to
Yes, please.
calculate the dollar value for oil, then you're going to multiply 1 pip. We want to find out the dollar value for a single pip of crude oil. So you
Mm-hmm.
take this, how 1 pip is represented, 0.01, and you multiply it by 1,000 barrels.
Mm-hmm.
1,000 barrels. So that will be $10 per pip. $10 per pip. Now, for some brokers, their contract is this thing. They don't, if you're going to, they do contracts of maybe 100 or 10 barrels. So if another broker is giving you 1,000 barrels, for a standard lot, and you make $10 per pip, others might give you 100 barrels. Their own standard lot might be 100 barrels, and you make $1 per pip instead. So for you to make $10 per pip, you have to use like 10 standard lots. So you need to always confirm how it is traded on your broker. Because for things like oil indices, they are high volume, highly volatile commodities. So sometimes what certain brokers do so that different people can take part in trading these commodities is that they reduce it. Instead of placing their standard lot as, say, 1,000 barrels, they can reduce it to 1 or 10. So you might not make so much money, but you can make a little. So it's always important to confirm. And of course, they want to do the calculation. The calculation would follow the same calculation that we did on gold. So do you
Yes.
understand?
Yes, please.
Okay, so let's go to Bitcoin so that we can finish. Let's Bitcoin and Ethereum, and then we know that we finished with calculating pips. So we have Bitcoin, and it's popularly traded against the USD. So Bitcoin is quoted in this thing in five digits and two decimal places. Let's go to JIFU and see how BTC is quoted. So this is how BTC is quoted, so this is it. It's usually two decimal places, but JIFU is putting just a single decimal on TradingView. On TradingView, we have two decimal places for BTC. Let's see. Yeah, it's always quoted, with two decimal places. So that
Yes.
is how it moves. So now, if BTC, if some platforms you cannot trade BTC 0.01 is a minimum of 0.1. 0.1
Yes.
is equivalent to 0.01 on other platforms. So it's important to know that, but I think XNET uses 0.01 pip size, and also
No, 0.1.
XNET actually uses 0.01. If you try 0.01, you'll be able to trade BTC. It's Ethereum that uses 0.1 on XNET. So yes,
Okay.
I'm actually in a BTC trade and 0.01. I've not traded 0.1 on BTC using this thing, because I know that that's the small you can enter with 0.01, but Ethereum is what you need 0.1 as the minimum lot size. So it's important to always confirm how your broker moves. So you can try it. If maybe you're not sure yet, you can just take a 0.01 trade on BTC and just confirm, even if you can just enter and come out. But can you just do that now to check and confirm?
Okay.
Yeah, because I like, let's be
Okay.
practical.
What do you ask me to do?
You can take a buy or sell. Just take a quick buy and sell 0.01 and see if the trade executes, and you can quickly take it out of the market.
Okay. All right. So let
I
me.
just want us to confirm, because I know XNET allows 0.01 for Bitcoin. So you can just take it and confirm that you can trade 0.01 on BTC on XNET. So please, once you do that, you can just let me know.
Okay, ma'am. Just a minute. I'm on it now.
Okay.
Okay. Yeah. So let me just take a buy. Okay. Yes. Yes. It permits it on 0.01.
Okay. Awesome. Awesome. Okay. Just okay. All right. So let's go ahead. Let's go ahead. I think subsequently we would be holding the classes in the evening so that we don't miss out on the educators. Yeah, the educators usually come on around this time, so we don't miss out. So let's see. For pip value, one lot size is 1 BTC. 1 pip is 0.01. 1 pip is 0.01. So a 1 pip movement is actually equivalent to 0.01 this thing, $0.01. So it takes 100 pips movements for you to make $1. So if BTC moves by 500 pips, If it moves by 500 pips, that means you made $5.
Mm-hmm.
And then there are other other micro lots, 0.1, 0.01, etc., etc.
Sorry,
And like
you say 1 pip. 1 pip is how many units in
one
BTC?
standard lot is 1 BTC. 1
Okay.
pip, and we've already established what 1 pip is. When BTC
Yes.
moves from 25,000.00 to 25,000.001.0, that's $1 move, and that's 100 pips. And if your
Okay.
broker is using meeting would end, we have just 10 minutes. So if your broker is using 0.01 and 1 pip is equivalent to 1 pip is equivalent to $0.01, it means that for you to make $1 movement like we have seen, it needs 100 pip. Like here now, it needs 100 pip. Like here now, this place, this 0.01, and then it moved from 25,000.00, and it moved to this 25,000 point this. This is 100 pips. Please, can you see it? Can you just confirm that you understand this?
Yes, I'm looking at it.
Okay, no, it's a different thing looking at. Please, just be very frank. If you don't understand, just say you don't understand. I can explain 1,000 times till you get it.
Okay. Okay, please explain the 25,000 to
This is
25,001 move again.
25,000.00, and this is 25,000.01, right? So
Yes.
now, no, this is 25,001.00. So we've established that this is this thing, okay, 5, and this is 1 pip. This is 1 pip movement. But of course, we don't present in numbers, we don't present 4 zeros, you just leave it as 0.01. So this one is 1 pip movement.
Mm-hmm.
This 1 pip movement, right? Let me even
Mm-hmm.
put another one here. 25,000.10. This is 10 pip. This is 10 pips movement.
Yes.
So this one here is now how many pips?
This one now is 100 pips.
Exactly. This 100 pips. This 100 pips. So now,
Yes, wait.
if BTC moved from 25,000 to 25,001, that 100 pips movement is valued at $1. Valued at $1. This values at $1. You can also put this one is valued at, this thing. Where is the dollar symbol? My eyes are seeing red.
Sorry.
0.1.
It's valued at 0.1.
And then this is valued at 0.01. See, this thing is actually very straightforward, right? So,
Yes.
so now, what is the dollar value? We've already done it up here. For 1 pip is 0.01. For 100 pips, is $1. Is $1, straight up. So if I take a trade of this thing, I take a trade of $0.01, 0.01 pip, and then my market moves. My market moves by 500 pips. I know that that 500 pips is actually 5 USD. Is actually 5 USD. See, it's as simple as this. For me, I don't like anything complicated. I like keeping things very simple. When you want to enter a trade, and you take this trade, when you take this trade on your MT5, it shows you very simple how much you're going to make and how much you're going to lose. You can also use the currency calculator to calculate it, but I want to finish Ethereum and know that we are done with this, so that the next session we can look at maybe the MetaTrader and then go to this. And see, this video is just, like I said, is just for you to know. It's not like it is something compulsory that if you don't know, you cannot take trades and succeed. And it's because I'm doing, more like this learning session, because normally is knowledge that you don't need to have for you to succeed in trading. I have to just repeat that, so that we know. So this Ethereum is also quoted to 2 decimal places. So if the same thing that we did here, for BTC is actually the same thing here for Ethereum. Is the same thing here for Ethereum. So this is this.
Yes.
This 1800. This 1801. This 18, yeah.
100.10.
Yes. And then this is
1800.01.
No. It's not 18. This 1 pip. There's nothing inside. Just leave it like that. This one is just so that you just know. Even if you had 0.01, but then let's just keep it there. Of course, it's 4 digits. 4 digits, 0.01. In fact, I want to even remove this other 18 so that we just see the 0.0. So we'll just see the 1 pip movement, 10 pips movement, 100 pips movement is as straightforward as that. And then the pip value, of course, is the same thing like what we've calculated for this thing for BTC. In fact, we've already even done this calculation here already. So I put all of this. In a very simple table for us to see, what the lot size looks like. This is the asset. This is how it's usually quoted. Gold, oil, Dow Jones, BTC, Ethereum, and then this is what 1 pip looks like for your USD. This is how 1 pip looks like for USD JPY. This for gold, this for oil, and then this for indices, and then this for BTC, Ethereum, and then the lot size. Of course, all of these are standard. These are standard lot sizes. And then for the standard lot sizes, we've calculated, the pip the pip value for the standard lot sizes. So, and this brings us to the end of this how to calculate pips. And like I said, you don't have to know this because everything is already almost on autopilot these days. So
Yes, ma'am.